Thank you for joining us on today's episode of Tax Matters. I'm Chiamaka Ohawuchi. There are 12 months in a year, 4 quarters, and now a quarter is gone. Elections have also come and gone, and there are new men and women on the block. Well, even when they are not new in office, they have renewed mandates. We do hope that now that electioneering is behind us, we can face the business of running our various businesses, and that governments at the various levels will also face the business of delivering the dividends of democracy to the citizenry. And talking about running businesses, this week is the deadline for filing and payment of direct assessment tax obligations under the personal income tax regime. Returning to government at various levels. To deliver the dividends of democracy, government needs revenue. All over the world, this revenue largely comes from taxes. Yes, because like one of the leading lights in the taxation profession in Nigeria likes to say, even the earnings from oil and other mineral resources come through taxation. So, if taxation is that important in the running of government, what are the best practices? How do we administer taxation for optimum yield? What do we need to do differently? We have spoken to leading lights in the taxation profession in Nigeria and to Nigerians from various walks of life. Our respondents have also been asked to set an agenda for the incoming administration. That is our takeoff point on this episode, and it will continue in the weeks and months ahead, leading up to the change of pattern on May 29, 2023. As we all very well know, taxation affects everyone. Even the young ones who ordinarily are not liable to paying taxes are involved. From time to time on Tax Matters, we bring you stories of debates, quiz competitions and the like involving secondary school students and their senior counterparts in tertiary institutions. Only on Tuesday, 21st of March 2023, the CITN hosted the 3rd edition of the Lagos State All Secondary School Tax Quiz Competition. Excepts.
Question number 4. Under which law in Nigeria is the amount of tax to be paid on income by individuals determined? A. Personal Income Tax Act as amended. B. The Nigerian Labor Law as amended. C. Individuals Income Tax Act as amended. D. Employees Income Tax Act as amended.
A. Personal Income Tax Act as amended.
A is the correct answer.
Number 1.
A company, John PLC, has a net profit of 100 million naira for the year 2021. How much will it pay as company income tax for the fiscal year ended 31st December 2022? A. 60 million. B. 31 million. C. 30 million. D. 45 million.
C. 30 million.
The young shall grow. Watch out for the full story of that quiz competition on Tax Matters. Now to our respondents. How can we make the Nigerian tax system better? How would you assess the tax collection or administration system in Nigeria?
There is a huge gap in terms of tax collection. I think, when I look at the federal level, most of the issues come from the lack of digitalization. Of course, the FRS has done a lot in that regard, particularly with the introduction of Tax Pro Max, which sort of simplifies the process, gives you the ability of doing things from the comfort of your home, which is where we should go. But when you look at what the Kenyan Revenue Authority has done, there are several steps ahead because they've introduced sophisticated systems for VAT and for excise. There's also a disconnect between the FRS and the Nigerian Customs Service. In many other countries, collection of corporate tax, VAT, customs and excise, your import duties and the likes, is all done by one revenue authority. So if I pick Kenya as an example, it's Kenyan Revenue Authority. You don't have Kenyan Customs Service. In South Africa, it's South African Revenue Service, and they do everything, including corporate income tax and customs. Now, the advantage that gives is that the data will sit with one revenue agency. But because of our systems, it creates a disconnection, and the tax authorities are unable to connect the dots. When someone imports raw materials, what was the cost of the import? How much import duty was paid? What's the transfer price for transfer pricing purpose? How much deduction is taken for companies' income tax? So when this disconnection is not there, it's difficult to do proper tax administration. And at the state level, I think it is simply data. I'll tell you something about the Nigerian tax system. It's interesting because the most difficult taxes are collected by the states and local government. And the easiest taxes to collect is collected by the federal. Because companies are easy. Going after a business is easy. But going after individuals or going after business premises and pursuing people here and there, that's been given to the state. And because of the lack of resources at the state level, they're unable to use data efficiently. And the interesting thing again about Nigeria is you pay taxes in the state where you're resident. So I can actually tell you that I'm resident in Ogun State, but I'm working in Lagos. And with that, it's difficult for the government to police. But there are solutions to addressing some of these things with technology, proper identity management, and having a system that connects everything together. It's possible.
In your opinion, I want to know what more do you think can be done to increase the tax to GDP ratio of our country?
Yes. So increasing the tax to GDP ratio, there are some low-hanging fruits. One of the biggest low-hanging fruits is actually customs. Now, when I say customs, and why am I looking at that as a low-hanging fruit, is because we are an import-dependent country. So everything, in this room is probably imported except the human beings sitting in here. But when I look at, our import duty per capita and compare that with other countries, it is significantly low. And I cannot remember the data because I don't have that in my head. But when if you look at import duty collection, it looks like we're doing well. But when you divide it by 200 million people importing, it's really poor. It's abysmal. So the import systems, and I know the Nigerian Customs Service has been investing in technology to enhance reporting. But I think a lot more needs to be done to ensure that there are no leakages within that system. The other thing we probably need to do is, when you look at the information, we have economic activity, and that's what is leading to that GDP. The problem is that within that economic population, only a few people are contributing. So we need to unlock the informal sector and look at mechanisms whereby the big corporates can help the government, in a partnership to unlock that revenue. I will not shy away of mentioning one of the most important things for Nigerians, which is the issue of trust. When we pay our taxes, right? If we overpay, would you give us a refund immediately? So when I was in South Africa, I practiced in South Africa for a bit. So we do the normal pay as you earn. You file your tax returns. If you file your tax returns and you have a refund, within 14 days, you get your refund back. I don't have to beg anybody. I don't have to cry. I don't say, oh, come and give me my TCC. It is done automatically. So we need to ensure that we get to that level. And what are you doing with our money? So you know, and this is outside the tax system. It's now going into transparency and accountability. You know, how are you able to report to citizens that the projects that you have commissioned were not given at over-bloated, you know, budget basis? You know, how are we reporting how the revenue we collected translates into the education for my children, translates into security? If government cannot do this, then trust will be broken, and you continue to have a situation where people are not encouraged to comply. The final bit is the tax administration system. The approach to tax administration needs to change. The way the government goes about it now is that if you are complying, you're the one that will be punished. So the person who complies, at the end of the year, the person wants to collect tax clearance certificate. Government will say, no, you're not going to collect your tax clearance certificate. So they punish you for being compliant. And because you're compliant, we'll come and audit you. So some people, you know, outside my clientele, you know, when I'm speaking to people on the day-to-day basis, they'll say, no, they're not going to register, because as soon as they register, they are calling for problems, you know. So government needs to have that risk-based approach to tax administration, where the most compliant people are incentivized and the most non-compliant and evasive people are punished. And punishment has to be real punishment. So when you look at the US as an example, there are always examples of people that have evaded, that are punished. You know, even celebrities we know, Wesley Snipes, Lauryn Hill, actors, musicians, that went to jail because they evaded tax. Similar thing you find in Europe as well.
Very well said. We must, however, quickly point out that at the FRS level, where corporates play, tax refund has become easier and faster. In fact, every year, a certain amount is appropriated by the National Assembly for tax refund purposes. With regards to tax clearance certificate, again at the FRS level, tax clearance certificate is now automatically available once the company's tax obligations have been fulfilled. We also spoke to Mr. Erukome's colleague at PwC. How would you assess the tax administration system in Nigeria?
The tax administration can be better. I think one of the reasons is very obvious from what we have as our tax to GDP ratio. There have been a lot of underlying reasons alluding to why that is relatively low, and it's currently at 6%. Some of them range from just the fact that we haven't deepened or widened our collection. We don't have as many taxpayers as we should in the tax bracket. There's also complaints around the fact that taxes are not harmonized. A lot can be said in terms of the improvement or progress that has been made in the last couple of years, but I think there's still a lot to be had if we want to get to where countries like the South Africa is, or even the Americas.
Now, how can we raise the tax to GDP ratio of Nigeria?
We do need to widen the population that we have within the tax net. We definitely need to address the fact that our taxes are not harmonized. The last count, we had over 60 taxes that businesses have to deal with in Nigeria, and it's even worse when you look at the fact that you have to deal with taxes at the local, at the state, and the federal level. One thing that we do here is the informal sector isn't taxed as much as it should, and that remains to be proven. When you look at Nigeria's landscape as well, you find that you have most of our GDP sitting within the informal sector, even though we do see that government's revenues is coming largely from oil and gas. But then that's a big problem for us, because then you start to see that the country is more affected by global shocks than it should be. And so it's very important that we diversify the economy. But again, the diversification of the economy actually exists. It's just some of it is sitting in the informal sector. And so some of the things you then need to look at is how can we take that informal sector and account for the taxes there in a way that would then push up the tax GDP ratio. And some of the businesses you find in that sector are paying taxes, but are these taxes going into the right hands? So you then have an issue of illegal tax collection, and that's something that definitely needs to be addressed. So in terms of harmonizing the taxes, we must then look at those different levels of government and start to identify which taxes can be harmonized. We need to look at integrating also the tax authorities so that we don't have them working in silos. Federal should not just focus on companies alone. Federal should work with the state tax authorities so that we go through all the channels of money changing hands and we're sure that we're actually applying taxes at the right levels and to the right people and not the same persons over and over again. That's one key way. Another way, which I said and I alluded to when I was speaking, was the fact that we're seeing changes now in our tax laws. They must reflect modern realities. And so those changes, we have only just started. There's a lot to be had. Now we're talking a lot about ESG. We're talking about greening the economy. We need to start thinking of how we can plug into that system. Nigeria has ambitions to be net zero by 2060, and getting there is not just by making bold statements, it's also about taking bold action. And one of those things would be that we have to look into our tax system and we modernize it. We have to align that with what the world is saying. Some of it might mean that we have to take away certain incentives, but we might then have to reintroduce incentives that can push us more to that goal.
There is more from Mr. Irukume and Ms. Agbeyi in upcoming episodes. Remember, it is a series. We also spoke to Mr. Taiwo Oyedele, also of PwC, and to the president of the CITN, and many more. It's explosive. Now to our question of the week. Mr. Francis Ugochukwu called in to ask to know if his non-governmental organization, NGO, has any tax obligations.
Mr. Ugochukwu, non-governmental organizations, also known as non-profit making organizations, are ordinarily exempted from paying taxes, but that is only as far as their core activities are concerned. Where an NGO or an ecclesiastical body engages in any activities that generate income, which is not part of its core activities, taxes are due. Even more so, where their interactions with organizations involve taxes like VAT and withholding tax, in which case the NGO must inform the revenue authorities of such inflows and outflows. In taxation, filing of tax returns is distinct from payment. In instances where taxes are not due, returns still have to be filed to enable the taxing authority to satisfy itself that all obligations have been fulfilled. NGOs are required by the FRS to file their returns at the Tax Incentive Management Office in Abuja, Lagos and Port Harcourt, as well as at designated MSTOs in the various state capitals.
Tax payment is a value chain, from assessment to payment and to the acknowledgement of that payment, all resulting in the issuance of tax clearance certificate, the almighty TCC. If anything qualifies as a New Year gift in 2023, it was the gift from the FIRS regarding the automatic issuance of TCC to companies that have fulfilled their tax obligations for the assessment year. That certificate is posted into the taxpayer's ledger without prompting and is accessible at the click of a button. That took effect from 1st of January 2023. In continuation of our story of the FIRS webinar on the impact of digital innovation on tax administration, we bring you the presentation on getting your TCC in 1 minute.
Tax clearance certificate is an official document which we know issued to a relevant tax authority to a taxpayer, satisfying that the tax assessed on the income from all sources of the taxpayer for the 3 years preceding the current year of the assessment has been fully paid. Now, this means that what we have done on the automated TCC is having your tax clearance certificate at the go. provided you have actually have all those 2 years account on the system. If you have those 2 years account, automatically you can just come to the system and click on it and to give you your TCC as stated on what you have actually filed. You need to have rendered your tax return to the FIS for 2 years to be able to be eligible for the tax clearance certificate at a go. If not, you have to go back to your tax office to issue you this tax clearance certificate. These are some of the uses of tax clearance, which you all know, is to aid contract, use of security for CFO, other regulatory requirements, application of government loans. These are all some of the little things we get with our TCC. How do you get tax clearance certificate on tax programs in 1 minute? You have to log in with your credentials, go to tcc.fis.gov.ng, apply for TCC, input your username and password, which most taxpayers have, log in, click on tax clearance certificate, automatically it will generate that tax clearance certificate for you. The TCC will be generated immediately as long as taxpayer does not have any pending self-assessment. I'm going to share my screen, the online system we use so that taxpayers will see how this works. We are using this particular taxpayer, Babangona Nigerian Limited. From Babangona's side, Babangona does not have any liability outstanding. So automatically he logs in, as I said earlier, he logs in with his credentials, coming in here, and he actually comes here, click tax clearance certificate. Immediately he does that, you see what he has now. Automatically it will tell him generate TCC. Now this is a caveat here. Due to the fact that this is a new process, the information online pertaining to 1 or 2 years, 2-year account, hence you may only be finally sent information on your TCC if you are successful. This will be updated momentarily. Kindly apply from the tax office for completeness. Now it means that if you have actually filed only 2 accounts or 1 account on the system, it means you can't get your whole 3 full years on the system. So you need to have to go to the office for them to do the needful by updating all the 3 years, preceding 3 years you have. Now, I just come here, click on generate TCC. If I click on it, now it will tell me notification. The TCC request has been granted. You have issued TCC for this year by just clicking this as a taxpayer. Now I'll come down here and view. I can see 31st December 2023, approved, and I can click on view. It downloads the TCC certificate for a taxpayer to be able to see what he has. Now, you can see this is what we have for this taxpayer. Name of the company, the date of incorporation, FIS ID, and business address. Now, from the information down, you'll find out that the assessment here for 2020, 2021, and 2022, you find out for 2020, everything here is 0, that is nil. Then you have 2021, it's giving you figures for assessable profit or loss, now which is a loss. Then for 2022, it also gives you 0. Now, it ordinarily means, as it's stated, this taxpayer has only filed 1 account on the system, which is for 2020 account, which is 2021 year of assessment. Now, if what he's seen is not satisfied with, it means he has to go to the tax office for them to be able to upload all this information for these other 2 years and issue him another TCC.
There you are, TCC in 1 minute. We are coasting home as we conclude with the story of yet another engagement of the leadership of the FRS in the UK, the 2022 Qatar leadership cohorts. Mr. Mohammed Nami, Executive Chairman FRS, is the President of Qatar. At the closing ceremony of the cohort held at His Majesty's Treasury Headquarters in London on Friday, the 17th of March 2023, Mr. Nami opined that due to technological advancement in actualizing human needs, fulfilling social interactions, and conducting commercial activities, the way and manner of tax administration is constantly changing. He therefore called for tax administrators to keep up with the times by improving on their skills and competence in line with these changes. Mr. Nami said, Tax administrators must keep up with the dynamics occasioned by disruptive new technologies of the 21st century and arm themselves with the necessary skills, capacity, and character for effective and efficient tax administration in the fourth industrial revolution age. Mr. Nami praised the Commonwealth Association for its investments and contributions through its senior leadership program, which he noted has helped bridge the capacity gaps of tax officials in member countries. Without doubt, the capacity of participants to lead themselves, to lead others, and to lead their functional units have been greatly enhanced. FRS on the move. Tax administration in Nigeria is already at the next level. We urge you to take advantage of the technological strides being taken by the FRS, which are all aimed at making tax compliance a stress-free exercise. Surely it pays to pay your tax, especially now that the process is as easy as ABC. Thank you for watching. See you next week.